Welcome to the Fitpreneur podcast, where every week we sit down with an esteemed business leader and we dive into the intersection of fitness and business. So we go through the strategies of achieving their goals both inside and outside of the gym, from nutrition to exercise, mindset to productivity hacks. Whether you're a seasoned entrepreneur or you're just starting out on your journey, this podcast will give you the tools you need to optimize your health as well as your business. This week, we are sitting down with Adam Rundle. Adam, how are you today, bud?
I'm really good, Dustin. Thanks for having me. It's good to be here, man.
Yeah, awesome, man. Yeah, I'm really excited about this, and I know a lot of our audience will enjoy this podcast. So a lot of times when we think of building an online business, we just think of the time freedom, or we think of the amount of money that we're going to be able to make. But oftentimes we do not think of the logistics, the operations, the metrics, the tracking, all of the back end office that goes into it, and the ever drudgery of taxes. So those things all play a role in it, but we don't think of it when we're just really excited. We're full of motivation and we're ready to do something new. But after we get the ball rolling and we start getting money coming in, we start building it from a solopreneurship into an actual business. So figuring those things out, Adam, just kind of tell us a little bit about you and what you do and how you can help people in the coaching space or the consultant space.
Yeah, thanks. I run a company called Clever Profits. We're a strategic advisory firm, fancy word for an accounting firm. And our job is everything finances when it comes to businesses, and particularly, online service-based businesses, coaches, consultants, course creators, digital marketing agencies is kind of our niche, is where we've been at for the last 7 years now. And when we think about, how we help our clients, it's all about the financial structures that need to be in place in order for you to run a successful business. And as you mentioned, there are logistics, there are things that you have to do, there's compliance elements. Unfortunately, if you live in this great country that we live in, you're going to have to pay taxes. There's things you have to do. And so it's just ensuring that we have the right systems in place and structures in place so that we can track the things that we need to be tracking, that we understand how profitable we are. We understand what it means to be profitable. What are the things we need to be focusing on? What are the KPIs we need to be thinking about? Are we measuring them? Are we measuring them consistently? And are we within metric when we need to be? Thinking about cash flow, thinking about, saving money on taxes, how we can earn more money from our businesses, how we can pay ourselves effectively. All those different things require some form of a system. And it's no different to, if you are trying to help someone in the fitness industry, you come in and you say, hey, where are you? Where you're at in your fitness goals right now? Okay, where do you want to get to? And now let's devise a plan to help you get there. And whatever that looks like, whether it's nutritional, whether it's getting into the gym, whatever it is, it's exactly what we do, obviously just around the financial piece. So we look at a business, say, where are you? If you want to get somewhere, what do you need? How do we help you implement that? And then how do we help you stay the course and run a successful business?
Yeah, that's awesome. Yeah, I love that. And so you had mentioned KPIs. So again, depending on where you are with your business, to all the listeners out there, KPIs are huge. So it's key performance indicators. So with the KPIs, I know myself, we track a lot. We track tons of different metrics, from conversations that we have to our close rate to, there's just so many, because the importance of tracking and of metrics is that it lets you know where your holes are. It'll let you know where your weak points are, what you need to improve on. And without tracking, you don't really know. It's just kind of, you just start all over. You just tear it down and start all over. And so instead of having to do that, to demolish and rebuild, by tracking, you can figure out where your holes are and just improve in that area and then go from there. So when you're talking about, your KPIs or your metrics, do you have anything specific that you would just kind of share with our listeners that they might not know of, or something that might be able to help them out to where they can start tracking stuff if they're not currently?
Yeah, of course. Measure it, you can't manage it. Some age-old sayings there. The first thing I want to say is that, unfortunately, I would advocate that the accounting and financial industry has really made it horrible for us to want to interact with it. It's not too dissimilar to like the legal industry and the medical industry. It's so complicated. There's so many barriers. And most people, myself included, and I'm an accountant, you often just feel inadequate. You feel, I don't even know how to interact here, because it's just, I'm not maybe clever enough, or I didn't go to school and I don't understand debits and credits and how a P&L works, or balance sheet, and I want to say that that's unfortunately not true. Well, fortunately, that's not true. It's actually really simple. Way before, I use this analogy many, many times. Over 2,000 years ago, there was undoubtedly some guy sitting on the side of a road selling some wine. And, if you believe in Jesus or not, he may have walked past him. I don't know. But there was some guy there selling wine. He was running a business. There was no gap. There was no IRS. Well, maybe in those times there was the Roman Empire, which was maybe worse. But, there weren't all these things that were complicated. Those all came later. Those were all structured later for us to deal with how to run a business. At the end of the day, he was still running a business, or he or she was making wine and selling it, running a business. And if we can just like strip back our businesses to think about the simplicity of that and go, well, what is our business? How does it work? I often say to people, especially people who work for us when they're dealing with clients, is do you know the story of this business owner? Do you know what they're trying to do? Do you know who their ideal client is, how they're going to serve them? Do you know the story? Because that's actually what business is, and that's actually what finance is. It's just following the story. It's just putting a whole bunch of numbers to a story that already exists. And when you understand that, you can remove a lot of the complexities. And what we did is a couple of years ago, I was actually trying to help clients understand these KPIs. So what are the best ones to measure? Because there's hundreds of thousands of KPIs out there. You can measure anything. You got a bank account with a bunch of numbers, and you got a business that you're running. There's so many, you can measure all of them. So which is the ones we want to be measuring? Which are the ones we want to be spending most of our time focusing on? And so I was trying to answer that question too. And I'm going, I don't know, profitability is a good one. And what about labor ratios? And, you got all these things spinning in your head. You go to school to be an accountant, and they throw all these stupid ratios at you, and you think that they're important until you realize there's no applicable application to them in the market. And you're like, well, that was dumb. And I read a number called Simple Numbers, Big Profits from Greg Crabtree, as well as Mike Michalowicz's Profit First, which most people know about. Most people have heard about Profit First from Mike Michalowicz. Great books. They're on two very opposite ends of the spectrum. Simple Numbers, Big Profits is a very detailed book around like understanding the core numbers you need to know to run your business, but it's very accounting-esque. Profit First is very mindset driven. It's very, hey, why do I think about this? I love the book, but it's more about a mindset of, hey, let's put profit first. Let's make the most important thing the most important thing. Let's not think about that last. So I love that. And we kind of developed a framework. It kind of maybe sits in the middle of those two. That's a little bit more detailed than Profit First. So it gives us a little bit more meat to work with, but it's not as in-depth as something like Simple Numbers, Big Profits. That is very accounting-esque. And we called it the perfect P&L. And all it means is if you're running your business every week, every month, you should be able to run a P&L statement, a profit and loss statement of how you performed. How much money did you come in? How much money did you generate? How much money went out, and all the things that you need to pay for, and how profitable you were. A simple performance statement. Like, anything that can measure performance in the world is important, and a P&L measures the performance of your business. What should that look like if it was perfect? If every month it was done perfectly, you maximized on revenue generation, you minimized on costs, and you maximized on profitability, what would it look like? And every business is different because every business is structured differently. So everyone's going to allocate resources in different ways. But when you start to understand different business models, you can start to see the pattern and say, well, there's a pattern of what perfect looks like. Now, perfect may never be achievable, and it's a goal that maybe is futile, because every time we get better, we're just going to move the bar. We know that. But if we have some form of perfection, if we have this picture that says this is what it should look like, we can then start to answer the questions about KPIs. What's good? What's not good? What do I actually need to be focusing on? Do I need to be focusing on how much I'm spending on software? Or is that too menial? Should I maybe be focusing on a different number? And that's what we developed. We developed this thing called the perfect P&L that goes, okay, if you are a consultant, there's a particular model that you're most likely following, and we can tell you exactly how much money you should be spending in different areas in order to maximize your profitability. Now you have a KPI metric sheet, and you're just going to go, well, where am I compared to this? If I generated $50,000 in a month and I spent X amount here, X amount there, X amount there, is that good or is that not good? And if it is good, well, then great. I must keep doing that. And if it's not good, I now know what I need to go work on. And so that's what we developed. And it's not hard, because in every business, there's really only 2 or 3 metrics that actually matter. And if you're a consultant or a coach, there's only 2 metrics that matter. And the first metric is, how much did it cost me to get a new client? So acquisition cost or marketing costs. How much do I need to spend to get someone to pay me money? Because if people don't pay me money, I don't have a business. So if I don't have revenue, I don't have a business. So everything else is futile. There's no point even continuing the conversation if I don't have revenue. So the first thing I got to go do is get people to say, hey, here's money. I believe in what you're doing, or I want your service, or I want what you're offering, or I want this transformation, whatever it may be, but here's money. So the first thing we want to know is, how much does it cost for us to get that person to do that? And that may include, some micro metrics there, close rates, lead costs, conversion costs, all there's lots of little micro metrics, but ultimately what we want to know is, how much should it cost us to get that person to come in and say, here's my hard-earned money? That's the first metric. And the second metric is, how much did it cost me to deliver what I said I would deliver? And we call that fulfillment cost. So it's usually the cost of labor. It's usually the cost of humans to deliver the outcome. So if I'm a one-man coach, I'm going to say, well, my salary is that main metric. So how much revenue do I need in order to cover my salary? If I want to make $200,000 a year, how much revenue do I need to generate in order for that metric to be aligned so that I can earn that kind of money without hindering the performance of my business? So those 2 metrics, client acquisition cost and fulfillment, are pretty much so it. The rest is, I'm not saying it's not important, but the rest is overheads. The rest is like keeping the lights on, software costs or insurance, whatever it is. Not that they're not important, but they're not going to move the needle. You're not going to go spend a whole bunch of money on software to get a new client. So yes, we want to manage those to keep them cost effective, but they're by no means the most important metric. What I did say, though, is sometimes there could be 3. And where in the businesses that have a third are the businesses that normally have a physical product. So if you're selling, let's say you're selling nutritional supplements, the third metric would be, well, how much does it cost for me to get those supplements? And then what am I selling it for? So kind of a markup cost, some kind of cost of goods sold. We're looking at that metric and saying, well, I can't buy it for $20 and sell it for $21. Like we all know that metric's not going to work very well. So I've got to have some kind of good markup there. So if you do have physical products, you're going to throw a third one in there, and that's going to be your margin that you're going to have on your physical products. But that's it. The rest is way less important than you think it is. If you get those 2 numbers right, acquisition and fulfillment, the most likely you're running a good business and you're earning good money.
Yeah, I agree. I agree with a lot of that. And you're exactly right. When it comes to the first 2, those are the main 2 metrics you have to follow, because you need to know what it's going to cost you to get a client, and you need to know what it's going to cost you to fulfill that client. And in regards to the back end stuff, if you do have products, there's got to be some kind of markup there. And that's definitely something you have to track. Otherwise, you're going to be in the red and go, well, why am I in the red? Because you weren't tracking it.
Yeah.
And funny story, and I'm going to try and keep it super simple and quick, but a family member of mine wanted me to come in and do business with them. Typically, the only time I ever do business with anyone is when they have something that I don't have. They either have time I don't have, money I don't have, or something else that I do not have. So in this case, it was a good investment, I thought, to where I put in a lot of money to be a third partner in this business. And so when I did that, the first thing I asked for was a profit and loss sheet. And he said, well, I'll get you one. So they talked to the accountant. A week went by, 2 weeks went by. I asked for one again. A month went by. I asked for one again. Never. And I'm like, how are we losing money? Why? There's this money pouring out somewhere, and I have to have a sheet in order for me to know where we're losing money at. And so eventually the profit loss never came, and I got out of the business. You have to track stuff. It's important to know where money is going, because at the end of the year, you're going to go, why don't I have any money? Where did all my money go? Oh, it's because my ads weren't converting and I was spending triple the ad cost, or it took me 3 times the amount of money to bring a client in that I had projected for, whatever it may be. But tracking it, whether it's bi-weekly or monthly or quarterly, is super important for you to be successful if you're building something that's going to be sustainable for a long period of time.
And I want to add to that. I want to say, yes, we can track things. You can track a lot. And there's a thing called analysis paralysis. You can track so much that you actually lose sight of what's real, of what's like actually important, because you're just tracking and tracking and tracking. And I often think of, I don't know if you watched the movie Moneyball, where, it's a great concept, but it's never actually been successful that you can choose a team based purely on statistics and win, because they're human beings. There's other factors that you have to factor in. Like it's beyond just numbers. So if you boil everything only down to the numbers, you're also going to limit you put yourself in a different box. That's very limiting. So, oh great, I'm tracking everything. I've got all my KPIs, but that could also be limiting. And the way I believe that you get out of that is you got to optimize for the outcome that you want. So the purpose of choosing a team, a baseball team, is to go and win a World Series. That's the purpose. It's not just that you can have the best at-bats and the best this and the best stats. It's to actually go win a World Series. So there's other factors. It's not just the stat sheet. There's other factors that come into play when you want to do that. If you want to run a business, you've got to identify what am I trying to optimize for you? What am I trying to do? And let that drive the numbers that I want to track. And I'm going to tell you the answer, because you're going to maybe BS yourself, if you're listening to this, of why you're trying to run your business. And maybe saying, oh, because I want to impact people. I want to serve my community. I want to transform people's lives. I want to give other people opportunities that I never had. Those are great. Those are great things to have. And I'm not saying that those aren't important. You're running your business so you can make money. That's it. There's no real other reason. Because if your ultimate goal is actually just to help people transform their lives, go work for someone else who transforms people's lives. Let them deal with all the headache of running a business, all the logistics, all the complexity, and just go transform people's lives. Amazing. You've achieved your outcome. That's brilliant. Well done. But if you've chosen to be a business owner, it's because you want to control how you make your money. There's nothing wrong with that. And I'm not saying that your ambition to serve is diminished. No, but that's a secondary outcome to running your business and making money. That's why you chose to do it. You chose to take control. I'm a business owner, just like you. I don't want to be under someone else's time scrutiny. I don't want someone else to dictate how much money I make. I want to take control over that. I want the freedom of that. So if that's what you're optimizing for, then optimize for that. Then create a business that earns you as much money as you can earn. Don't create one that makes you look good on social media or makes you look good when on this or that. No, create one that actually makes you money. And so then you start to realize, okay, well, then there are certain things I don't need to worry about. And yes, I have to worry about acquisition. I have to worry about fulfillment, because that's what makes me money. If I don't worry about them, I'm not going to make money. If I don't make money, I don't have a business. And it sounds obvious, but it's not always carried out, because we can get caught up, myself included. I'm not trying to, often when you say things, you often are talking in a mirror. Like I'm talking in a mirror here as much as I'm talking to anyone else. You got to sometimes go, hey, whoa, what are we doing? Like, hey, I've got this business, got all these people think, oh, what are we doing? What are we doing? Have I made money? Have I got my return? And yes, some people don't like capitalism. It works though. It's the way it works. I subscribe to, John McKay, the founder of Whole Foods. He wrote a book called Conscious Capitalism, which is like, yes, capitalism is important, but you also want to be a good human being about it. So you want to be ethical. You want to be all those things. So that's what I subscribe to. But it's still capitalism. I still want to make sure I make money. I'm not here for free. I'm not here for charity. I'm here so that I can make this thing work. So we've got to optimize for that. And that's the best thing you can do for your business. And that's the best thing you can do for your clients. Because if you don't, you're not going to be around in 6, 12, 18, 24 months. Then everyone loses. You lose, your clients lose, everyone, all this transformation, all the service, that's all gone. Optimize for the thing that matters.
Yeah. Yeah. I agree with that 100%. And there are tons of people, whether they're in the fitness space or the coaching space or whatever it is, that say, it's like, why are you doing what you're doing? Oh, I'm doing this because I want to provide as much value to everyone as I can. It's like, again, like you said, Adam, that's the secondary. The reason why you're doing it is because you want to make money. It's a business. That's why you're doing it. Now, the secondary would be because you want to provide as much value as you possibly
100%.
can.
And I'm not
But
diminishing that. I don't want anyone to feel like that's not important. Of course, it's important,
right,
but it's a
right.
byproduct of something.
Yeah,
And it's the same argument. I don't want to say this because I know we were chatting briefly about taxes beforehand, and I said I probably didn't want to talk about taxes as much because here's my view on taxes. I'll tell this to this is what I said to everyone about taxes. No one wants to pay taxes. We don't want to pay. No one wakes up in the morning and goes, "Oh yeah, let's go give the IRS some of our hard-earned money." No one wants to do that. But taxes are a byproduct of running a business. So if your modus operandi is to not pay taxes, then don't run a business because it's never going to work. You're going to pay taxes in some way or form. Yeah, you can mitigate them. You can put structures in place. You can do a lot of things, but you're going to pay taxes. It's going to happen. So rather focus on making so much money that the taxes are not negligible, are just not as impactful. That, yeah, there may be a lot of money and you may not like that, but they're still only a percentage of, they're just a portion of, you only pay taxes when you make money. You don't just automatically pay taxes. You got to actually make money to pay taxes. Right. So optimize for that. Go and run a business, make a ton of money, run it really well. And yeah, we can go deal with the tax consequences, but put the main thing first. When people come to us and say, oh, I just want to pay less in taxes. So, well, let's talk about your business. No, don't worry about my business. We'll talk about taxes. I'm like, that doesn't make any sense to me because taxes are based on your business. I would way rather you pay more in taxes, but run a better business and be around for a long period of time than spend all this time trying to mitigate your tax burden and jeopardize your business. Everyone loses again. Yeah, okay, you didn't pay the IRS, but you didn't make anything. So no one won. Let's optimize the thing that matters.
Yeah, I agree with that. It's taxes are inevitable. You're going to pay them. But just like, like Adam said there, if you don't want to pay taxes, then do not run a business. Go work for somebody else. That's
you're still going to pay taxes, but at least you're not going to.
Yeah, you're still going to pay taxes just at a smaller percentage. But yeah, and going back, I had loved something that you had said in regards to sometimes we get caught up, and metrics are important. It is important to track things, but don't get caught up in it so much that you're tracking every little thing that you're doing inside of your business, because then instead it becomes more of a distraction. You're wasting time. And again, we all know that there comes a point in time where time is more valuable than money. When you get to that situation in your business, your time can be more valuable than money, because like as a solopreneur, again, if you're tracking this, what is your time worth? It could be $200 an hour, $1,000 an hour. The bigger your business becomes, you're worth more. So when you're spending all that time tracking all of the small things that really don't matter, you're losing out on one or two clients or client acquisition or things that could actually bring in or generate revenue into the business. So make sure that you're using your time wisely, track the things that are important, and don't be distracted on tracking every little bit, that you have inside your business. But well, this was a super beneficial talk for me. I hope it was for all of our listeners. Adam, I appreciate you coming on. Is there anything else you want to talk about, or anything else that you want to share other than where everybody can find you? If they want to reach out?
I think I would just say, don't be afraid by the financial world. If you want to run a business that's going to be successful long term, you need these elements. I hate this. I hate it when people say, "What's the most important thing?" It's like everything's important. Okay, like right. Everything's got its importance level. Yeah, some may be a little bit more important than others, but there's never a one thing. There's never like, oh, I'm going to do one thing and I'm going to be the best. It's like, how many times in the history of the NFL has the team with the best quarterback won the Super Bowl? Way less than it's way more common for the team with not the best quarterback to win the Super Bowl than for the team with the best quarterback. Because to win a Super Bowl, you need more than just the best quarterback. Like, you need lots of stuff. Like, you need like everything has to work. And actually, oftentimes the teams with not the best quarterback are the teams that are the best, is because they aren't just reliant on one thing. They have to build out other elements of their performance structure. So don't get caught in this rabbit of what the one thing that's important. They're all important, but they're all important in good doses. So don't go, oh, I now need to go spend the next 5 days of my life only thinking about finances. No, you just got to think about, what do I need right now in order to move my business forward? What do I need to know? How do I need to measure that? And I've already told you what it is. And all you want is a system in place. You want a QuickBooks account or a Xero account, whatever you want to use. You want some kind of bookkeeping done. You want to get some reports. And you want to know, how am I performing? And then you're going to start to build the muscle of, okay, how do I use that information in order to make good decisions? And the thing that you are optimizing for is yourself and how you earn money. So if you want to learn, the thing that you want to learn the most about being from a financial perspective and being a business owner is how you earn money. And you say, oh, it's obvious. I just charge these 10 clients this fee and then I earn money. No. That's revenue. Everyone knows how to generate revenue. You go out and you sell the product or service that you're selling. Now, maybe some may be better at it, may not be very good at it, but everyone knows how to do that. There's a very big difference between generating revenue and then you as a business owner actually taking money out of the business and putting it in your pocket and saying, now I'm going to go and buy my house, or now I'm going to go on vacation, or I'm going to go care for my family, or I'm going to do these different things. There's a big gap between revenue coming in and that point in time. The best entrepreneurs in the world understand the gap and know how to manage the gap. The worst entrepreneurs in the world don't know the gap exists. And what I mean by that is, it's all the same for them. If they made $100,000 in their business, they made $100,000. And so they live their lives as if their business top line revenue was their income. And that is the most dangerous thing you can do. Top line revenue is there. There's a whole bunch of things that needs to happen, and then you earn money. We're optimizing for the bottom piece, not the top piece. Because if you're not optimizing for the bottom piece, you're going to go out and make sale after sale after sale after sale, and you're going to think you're running a good business. Guaranteed it's going to fail because you're optimizing for the wrong thing. We're optimizing for the bottom number. Once we paid everyone, once we paid all the costs, once we've operationally run our business, how much is left? Now, of that, what's left, how much needs to go to my cash reserves before I start paying it out to myself? How am I allocating that? Is it all mine, or some of it going to go to cash? Some of it's going to go to investments. Where am I taking that money? Then do I have the correct tax structure in place that I'm actually optimizing that? Or have I have a poor tax structure in place and I'm overpaying the IRS? That's what you're optimizing for. So remember, that's what you're optimizing for. So every single decision you're making needs to lead to that decision. If you want to generate more revenue, it must be so that you can make more money. If you want to hire more people, it must be so that you can make more money. If you want to do it so that you can make more money. That's what you got to optimize for. And don't be a silly entrepreneur and think that the top line is how much you earn. There's a big gap there. You got to learn the gap. You got to know where that fits in. You got to know where that all goes. And you got to understand what is truly yours. What did you truly make? And then you got to live within the confines of that. If your business is your personal bank account, you are not going to have a business for very long. That's it.
Yeah, that's awesome. I like that. There's been so many times, and it's easy as business owners. It's easy, especially just a solopreneur. It's just one person. It's just you. You're out here grinding, trying to make as much money as you can. But at the end of the day, even if you're a solopreneur, you're still a business. You're 100%. Probably a business entity of some kind that's going to have to pay in taxes to that business. You're going to have some kind of overhead, whether it's client fulfillment or client acquisition or whatever it may be. If you're running paid ads, there's things that are going to come into effect to where, like Adam said, if you're using that top number as your own, at the end of the day, you're going to be in the red.
Boy, every month in the red. You're not going to know why you don't have any money. You're going to be so frustrated. You're going to hate life. You're not going to have a business very long. Awesome. And it's sad because it's avoidable. That whole thing is avoidable.
Yeah, it is. And it takes practice, because if you've created the bad habit of doing that, of keeping yourself on the top end, it's going to take some practice, trying over and over again to learn put yourself at the bottom, because we all know that it's easier to create a bad habit than it is to break a bad habit.
100%.
So,
100%.
so, all right, cool, Adam. I appreciate the talk. Where can everybody find you if they need help?
It's simple, man. Just Adam Rundle. Facebook's the easiest. Cleverprofits.com. If this is something you want to learn more about, how we could help you, whether it's building systems, just some consulting work, whatever it is, payrolls, HRs, anything financially related, we're happy to have a conversation with anyone. It's what we do. It's what we enjoy doing. And we ultimately are here to help our clients make more money and have the systems in place so that they can actually enjoy that money and not just let it be notional on a piece of paper, but it's actually in their bank account and they can do the things that they want to do.
That's awesome. Yeah, I love it. Awesome. I will put Clever Profits down in the notes on the in the description of the podcast for anybody that wants to go and check it out. They can click on that hyperlink and it'll take you to his website, as well as I will put Adam Rundle's Facebook down there so you can connect with him as well if you have any more questions or want to reach out for further guidance. So I appreciate your time, Adam. It was awesome connecting with you. And yeah, I appreciate it, man. Super helpful.
Awesome. Dustin, appreciate it. Thanks for having me on your podcast. And to everyone who listen, appreciate you listening. And yeah, hope everything's going well in your business.
Awesome. All right. That's it from us. And just remember, guys, go down to the notes. And if you want to learn more about Adam at Clever Profits, click on his website address or find him on his Facebook link. And I will see you guys in the next one.